know will benefit from AI, but they will. So we're going to be talking about some industries, some specific stocks. And again, as everybody knows, these are not recommendations. We are not giving you stock advice. Do your own research. We're simply using certain companies as examples of industries that will benefit from AI. Now, with that being said, Leon's going to tell you why we chose this while I do a little bit of housekeeping.
Yeah. So as we know, this year AI has been the the topic of the year, right? Like coming into the year, it was recession, recession, recession. The Fed's going to raise rates till we all die. I mean, it was like December. I mean, I track myself pretty much every day. December, the market bottomed in October last year. December for me was the worst month of last year. So end of the year was a horrible year for the stock market. Sorry, the horrible quarter for the stock market at the end of the year. Coming this year, everyone was like, "Oh, doom and gloom. The Fed is going to raise rates until they break something." They actually did. So they broke they broke the banking system in March when SVB failed, and we had like two or three other banks that failed. So that was kind of the now. Having said all that, the market actually was rallying into that. Like tech stocks were recovering. It's kind of like, whoa, what's going on? And people were determined in the market is called people were off sides, and then everyone came to the year with defensive stocks like healthcare, consumer discretionary, consumer staples, things like that because they were like defensive. Like what do people actually need that people gonna buy anyway? Well, those were doing terrible coming into this year. Tech stocks were ripping to higher. It was crazy. Like everyone was completely off sides. Now, having said all that, so coming to the year, tech stocks were ripping. One of the things that nobody saw coming was the whole AI movement. So ChatGPT was the thing that started all this off. Was released in November of last year. It took like a month or two, but coming into this year is where it kind of really got caught the average person's eye, and then it started business started using it. People started saying this thing is magic. It's an awesome piece of technology. And then Wall Street was like, well, hey, how are all the companies in Wall Street going to use this tool to increase earnings, productivity, yada, yada, yada. So the term that's out here now, like the term FANG, was Facebook, Apple, Amazon, Netflix,
Google.
and Google last year or the last 2 years. FANG was coined by Jim Cramer. This year, the term is the Magnificent Seven. It's kind of terrible, but it's just what people have been saying. And that covers really the ones that have been running this year, which is Microsoft, Nvidia, which is up the most, Meta, Facebook, Netflix, and a few others. But there's seven of them that pull the market higher. Because if you look at, and I talk about this quite often, there's something called the S&P 500 that we know about. Then there's something called the equal weight S&P 500. S&P 500 that's weighted by market cap was up at one point, I don't know, like 6-7%. And then the equal weighted S&P 500 was actually down 5%. So what that means is the top stocks at the top, the stocks that have the most market cap, biggest companies in the world, Apple, Amazon, Facebook, all that, were pulling the market up, while the rest of the market was just sitting there, wasn't really doing anything. It was actually down this year. So once this AI narrative took hold, tech stocks ripped even more. Like they just took off. And I know I did. Like during January, February, I started adjusting my portfolio to then ride that wave. Now, was it going to last? I had no idea, but I could not sit back and watch Nvidia run 60-70% in like a month and not jump in. So I started to move. I started taking a little more risk.
You didn't completely sell out of your positions in Nvidia, did you?
I don't know. So no. When I paired my in 2022, I paired a lot. I did sell out. I did sell out of a lot of tech. Nvidia was not one. I did own a small portion of Nvidia, but I did cut a lot of it because semiconductors got decimated last year. So I started to increase my risk coming this year because I saw things were starting to run. Tech was starting to run a bit. Now, did I know it was going to last? I had no idea, but I was like, let me just start nibbling on some of these stocks that are running. So I said that to say the big tech companies really are benefiting from this AI narrative. Now, a lot of people don't realize is that behind the scenes, what's going on with this whole AI movement is that the big boys, the Magnificent Seven, Facebook, Amazon, Meta, and all that, they're investing hugely in something what are called data centers. And for people that don't know, data centers are just these massive buildings that house servers, right? So anytime you use anything on the internet, it's running through a data center somewhere in the world where the data is held. Actually, here in our area, we're here in DC, Maryland, Virginia area. Northern Virginia is the largest data center hub in the United States. So we're very familiar in this area with data centers and what they are. But when people think of data centers, they often think of, again, the Microsofts, the Apples, the Googles, because they're the ones that actually build these data centers to use them. But what Brent and I are we kind of pride ourselves on is something we call like environmental investing. If that's the right term, is that the right term, Brent? Is that what we call it? Yeah, environmental investing. It's basically where we look at a sector or even a stock, and we try to find, like, for instance, tech. We all know the big boys in tech, but all these tech companies have vendors and suppliers that they deal with, right? And a lot of these companies are public, but a lot of people they're not well known, right? So they're just typically, a lot of times they're small companies. Well, in terms of data centers, these are massive structures. I mean, they can be 1 or 2 football field size, the size of 1 or 2 football fields, and they're filled with hugely technical equipment, routers, switches, servers, the like. But what they're also filled with, well, they're built with concrete, steel, rebar, all things that deal with construction.
Yeah.
As well as things like generators, security systems, and the like. So what people don't realize, a lot of people don't realize, is that when we're doing this whole AI movement, what we're looking at as far as under the radar are what are called industrial stocks. Now, industrial stocks are stocks that deal with things like manufacturing, construction, machinery, and equipment, right? And remember, when all these data centers now that the big tech companies are either upgrading or building, they have to be all these things like generators, HVAC, security systems have to be upgraded or bought new because they're building new data centers. So one way to play this AI movement is not with, play the big boys too. Like Brent and I own a lot of those ourselves, the tech companies, but also look at these industrial companies that are what they call like the picks and shovels or the baseline to build out these data centers or upgrade these data centers. And one way to play it is you can play it either by, so the ETF for industrials, the ticker symbol is XLI. That's the S&P 500 industrials ETF. As Brent and I, always say, I've more Brent, but I've come around to his thinking a little more recently, is that individual stocks, we know, typically return higher than ETFs. XLI is an ETF, just a basket of industrial stocks. So you can play it that way, or you can play the individual stocks. Now,
or you can do a combination of the two.
Or you can do, right. Yeah,
so
it's not and/or, it's a combination.
And when we talk about this ecosystem investing, and I think that's what we were talking about.
Ecosystem, and I think that's what I was thinking. Ecosystem investing versus environment.
We have, really before even starting Investing Education Academy, like going back to high school, we used to always break down mutual funds. So they're called underlyings. So the underlying inside of mutual funds, we were always intrigued with, like, why do these growth companies have these, all the growth companies or these top growth companies from Oppenheimer, from Ameriprise, whoever it may be, Oppenheimer, remember them? American funds, Vanguard, they all the growth funds inside of these family of mutual funds has these 5 companies, like they all have it. So why not just buy the 5 companies? And this is a way of kind of creating it is not, but just an easy way to think about it. It's like creating your own mutual fund yourself, but now it would be ETFs. And so I am still a believer. I went over to Leon's side a little bit more, and I'm still a believer.
I went over to your side a little bit.
Yeah, so we met in the middle. So I'm okay with some type of individual stock risk, not completely single stock risk, but I will have a heavily weighted portfolio and be able to sleep at night. That is my style. Is not suggested for everybody. But then also I do realize it's hard to track all the stocks that an ETF like XLI will track. It's just not realistic for the average person to track the umpteen plus stocks that are inside of this ETF. So
on that point, XLI has 80 stocks inside of it. To Brent's point,
like who's going to track 80 stocks? And honestly, if you have a portfolio, and I'm telling you from experience, the physical scrolling aspect of seeing 80 stocks inside of your portfolio will drive you bananas.
Yep.
So, understanding there's a place for ETFs, there's a place for some type of individual diversification of an asset allocation inside of your portfolio. But yes, it is a lot of activity happening around AI. And when you look at the ecosystem of these data warehouses, there's a lot of ways to play it.
Yep. And like I said, a lot of people play it via the big tech stocks, which is fine. I mean, like I said, Brent and I own a lot of those too. But as of like right now, those are up huge. I mean, Nvidia's up at its peak was up 180% this year, almost 200%. I mean, it's pulled back some. AMD was up, I don't know, 100 and some odd percent or so, or maybe close to it. So tech stocks have run crazy, but industrial stocks hadn't, right? They hadn't run as much. Industrial stocks have still done well, but they haven't done as crazy as tech stocks. So a way to play the AI boom is not via the companies that provide the services, but via the companies that actually provide the infrastructure behind the services. Again, the data centers, the generators, the security systems, the HVAC systems that go into these data centers that are being built or being upgraded. And just give an example of, and I'm not saying buy these, not saying these are the ones you want to buy. I'm just saying, give an example. So an example of industrial stock would be something like a Caterpillar, a Deere, a General Electric, things like that. Again, companies that deal with like things like manufacturing, construction, machinery, or equipment. Again, to build a data center, you need all of those. And these data centers are going up. I mean, there's like literally like a war almost in Northern Virginia between the community and the tech companies that want to build these data centers, because there's large swaths of land out there that they want to take up to build hundreds of data centers. And the community is like, no, you're taking away our property. We're taking away our natural resources, our land. So it's a big thing around here in the DMV, DC, Maryland, Virginia area. But it speaks to how in demand these data centers are. And as of right now, I mean, even before AI, the big boom around data centers and tech in general was the cloud. We all know about the cloud.
Yeah.
And that was they said that wasn't going to be quote unquote complete till 2028, 2030. Now they're saying with AI, this whole tech boom could actually push out into the mid 2030s, 2035, maybe 2040, as far as the build out of what tech is going to be. Basically, for people that were around back then, some people are talking about this equating it to the 90s, the tech boom in 1999 in the 90s. However, the difference is these companies actually have profits and revenues and are real businesses. Whereas back in the 90s, it was all
everybody was a bubble.
Yeah. Oh yeah. I mean, everybody. I mean, all you had to do was say .com and your stock went to the roof. But they had no revenue, barely had any customers. These companies today are billion-dollar companies with hundreds of millions of dollars in revenue and profits. So we know the Googles, Microsofts, Metas are going to be around for the foreseeable future. But just look below the surface. Look at industrial stocks. Again, do your research. You can look at XLI. You can just, if you want to just buy that, but you generally get a low return versus buying the individual stocks. But do your research on industrial stocks. Last point is that to show the kind of return over the last 12 months, XLI is up 10% over the last 12 months. Not a year, not just a year, but over the last 12 months. XLI is up 10%, with the S&P 500, which is our benchmark that the whole ecosystem uses to track against, is only up 5%, right? So that means XLI, these industrial stocks, are more than double, crazily outperforming the general market. So again, and that speaks to why is that? Well, a lot of these things are in demand because this massive movement now in technology, data centers, these industrial companies are needed. Again, generators, HVACs, security systems, equipment, manufacturing, all that is needed to build these massive data centers.
Yep. And so for everybody who listens to this going, well, I don't really know how to do ecosystem investing. You should join Investing Education Academy, because it's one of the things that we talk about. And it's also a way that Leon and I like to break down industries and also trends. So I think the first ones was Leon led the charge when we were looking at Apple. Mm-hmm. And that was a really good ecosystem breakdown, because some of the stocks that we bought as a result of breaking down the companies that were responsible or holding up the whole platform for Apple that no one has ever heard of did pretty well. I have some in my portfolio and they did really well. Definitely. So with that being said, if you are listening to this and you're thinking, yeah, I would like to learn more about ecosystem investing. And yeah, AI is not stopping anytime soon. At some point, it will run itself. And so, before it gets scary, at least make money with it. And so it's a great place to be right now. We are in, a place where the world is changing, and these data centers are going up globally. It's not just here. You have people fighting for land in Africa. Um, I heard there was some talk about data centers going up in what was it, Madagascar, I think it was, like places you would just never even think of. So understand the market, understand what your goal is in the market, and then invest in an asset responsible way to make sure that you don't kind of break your own suitability. If you want to become a member, you can go to IEAmembers.com. We're happy to have you. If you have questions, please post your questions and we'll answer them as we can. If you're interested in joining the Portfolio Panthers, I have some exciting news. We are looking at buying into this dispensary company. They do transport and they also grow. So this is was a triple threat. And so we have the ability to invest in it, and we might be meeting with the owners of this company coming up in the next couple of days to present to us the possible ability to be a friends and family investor. That's pretty big because already they know they might get into series raises, which means we can lock in a what's the word I'm looking for, Leon? It's with a
valuation.
Yes, thank you. We can lock in a lower valuation than before they hit the streets doing series raises, which means that as the interest, theoretically, as the interest continues to increase for this company and possibilities, I'm doing air quotes for everybody listening to the podcast, the possibilities of a buyout or some type of liquidity event happening, we are better placed than most if we get in at the friends and family round. We have that. We have the build. We're starting looking at wholesaling in Baltimore. We're looking at buying property. It's just a lot of things happening inside of the IA Portfolio Panthers. And if I can, Leon, can I tell the quick story about one of the private equity deals we did?
Yeah. Yep.
All right. So when you guys, if you've been listening to this for like the last couple of years, I want to say like 2021, there was opportunity to buy into a private equity company that was in the aerospace arena. In that, we were able to get in. We weren't doing a series raise, so it was a crowdfunding raise. But looks like the company is going to IPO, and what would have been
not IPO.
They may be doing a special purpose acquisition,
right?
But they haven't said that officially. Everything's looking like anyway. If they hit if they become publicly traded, I can say that.
Yeah.
If they become publicly traded at the price point they are talking about, a $700 investment is going to yield us about $14,000. So these are things in over a 2-year period. So these are things that it sounds like slow growth, or the chances of some of these companies having a liquidity event is very slim. But when they do, it's not a bad thing to turn $800 into $14,000 over the course of 2 years. So just think about that when you're looking at the investments you're doing. It doesn't have to be immediate growth, and sometimes you got to just be patient, play the long game, and it'll pay off. So with that being said,
real quick on that point, I just want to make so yeah, that $600 investment that was made in two or 3 years ago. Again, as Brent said, if the company the company has put out, they've emailed some of us who are in Portfolio Panthers that are stakeholders, that are investors, that they will soon list on the NASDAQ. And when, as Brent said, it's basically via like a reverse merger or SPAC, whatever you want to call it. But whatever, it hits the market if and when it does hit the market at roughly $10 per share. As Brent said, $600 will grow to $14,000. That's a 2,233% return in 2 years. And again, those type of not saying every deal we do is like that, but these are the type of things that we present to the Portfolio Panthers. Also, just going back to what Brent said earlier, the marijuana dispensary company that we possibly are looking to invest in as well. We all know where that is going. It's become illegal in every country. Every state, almost every state. I think it's like half the states now. It's legal. And thought is that if Biden wins again, that over the next 4 or 5 years, it'll become federally legal. So that'll be a huge win. If we get into that again, either IPO if possible, or if they get bought out, what have you. But yeah, these are the type of deals that we have inside the Portfolio Panthers that we are excited about.
Yep. So anybody, if you're interested in joining the Portfolio Panthers, we have a meeting Friday with two new members. And if that happens, we will only have one seat available before membership goes from $5,000 a year to $10,000 a year. So if you are thinking about it and you're serious about it, I wouldn't wait, because if on Friday they say yes, that means we have 1 or 2 seats left that will be still at the $5,000 a year mark. And after that, $10,000 a year for anybody who's interested in joining the Portfolio Panthers, which it still be worth it. But it's if I could save that money, I would. Everybody, we thank you for being with us. We'll be with you again in 2 weeks, and we look forward to providing more financial information for you.
What do we owe them though?
We own 2 stocks. We owe you 2 stocks over the next 2 weeks. So if you are interested in knowing what the 2 stock picks are, please log into IAMembers.com, check the membership platform. And if you are not a member and you want to know what the 2 stocks are, you need to become a member. So you can go to IAMembers.com and sign up to become a member. If you are interested in actually getting our stock picks, which case the historical log of all the picks we've chosen over the last 2-3 years are in the platform. You have to have an insider membership or higher, just so you know. Insider membership or higher. Everybody, again, thank you for being with us. We look forward to talking to you in another 2 weeks.